Let's talk about one company that analysts seem to be rather bullish on, and we're talking about General Motors. For GM, it is time to buy. That's according to our next guest. Nicholas Colas is the Chief Market Strategist at BNY ConvergEx. He joins us now on the phone from Southampton, New York. Nick, great to have you here with us. GM shares have gotten a big boost in the last couple of days thanks to analysts initiating coverage on the stock and talking it up. You, too, like it. You've got to buy. Why?
Yeah, I think basically you can look at GM as a very leveraged play on the U.S. economy. That's obviously beginning to click over a little bit better, and especially because the automotive cycle is actually doing better than most cyclical industries. The auto demand is actually picking up where you see things like housing, and housing demand still pretty sluggish. So GM's got a pretty unique place in the investment landscape right now to allow investors to leverage that uptick in vehicle demand as the economy recovers.
And while we spend so much time talking about China and the potential there, I mean, the North American sales market is much more crucial to GM than China is right now.
That's so important to realize about the stock. Over 70% of the company's earnings right now come from North America. So having leveraged that North American cycle really is the most important part of the GM story.
At the same time, and you kind of differ from others, I mean, everybody talks about the potential for China, and that's why they like GM. I mean, GM needs to think about China. Certainly that's the future.
That's a very important point. GM certainly has a stake in China. It's got 3 joint ventures that are quite profitable and growing quite nicely, but they're only minority stakes that the company has in the Chinese ventures. The real earnings, the real cash flow come from North America.
Hey, what about the European operations? They lost about $1 billion on an EBIT basis in 3 quarters this year. They could break even in 2012. That's according at least to Barclays. What's your outlook for Europe?
Yeah, I think you'll still probably make a small loss in Europe in 2012. It is a very tough turnaround situation. The economy there is struggling with a lot of the same issues that we have here. Sluggish demand, sluggish recovery. So GM's got a lot of work to do there. Again, it really is a North American story for next year.
Nick, is it mind-boggling that it was just a short time ago that this company was in bankruptcy? It looked like it was just going down here. It needed the government's help, and here we are. It's out here. It's a publicly traded company again, and all you guys are coming out and say buy, buy, buy GM.
Yeah, it has been a long trip in a very short period of time, that's for sure.
All right, but you think it's going to be a good trip going forward?
I do very much so think it's going to be a good trip going forward. I think the company's got a lot of things going in its favor, most importantly that recovery in the North American cycle.
All right, so you're upbeat on it, but you do say the one potential negative for GM is oil prices. We've got to watch that very closely, not just for GM, but really all the automakers, but GM you say specifically here.
That's right, because the automakers as a whole still make up most of their profits in North America from the truck sales that they make. And trucks are pickup trucks and SUVs and minivans. Those vehicles get lower fuel economy, so if you see a big spike in oil prices next year, which certainly is a concern, that mix could erode pretty quickly. We've got to watch that very carefully.
You know, lucky for us, Nick, you cover GM, but you also cover the broader markets. We've just got 2 trading days to go. It's been a great month here for the equities and a lot of asset classes. It's in December. Do you expect the optimism to continue into 2011?
You know, I think we have had a very nice rally towards the end of the year, so I wouldn't be surprised to see a small pullback as we go into January. But at the same time, the data that we're getting is pretty promising about the economy in the first quarter. I think it's going to underpin Q4 earnings, give better outlooks for U.S. companies as we go through those Q4 earnings.
Right.
So it should be a pretty healthy first quarter.
Just quickly, though, the risks for next year, political in nature?
Absolutely. The most important risk next year is the increase that we need in the federal debt ceiling. That's going to come in a very politicized debate in the first quarter. You know, that's an important debate no one's really talking about yet.
All right. It certainly will be interesting for everybody to watch. Hey, Nick, thank you so much. Have a great new year.
Thank you.
Nick Colas, Chief Market Strategist at BNY ConvergEx.